Well, we learned this morning that November private payrolls unexpectedly fell by 32,000 jobs, led by steep small business job cuts, according to an ADP report. You wouldn't know the job market unless you're a victim of it recently through a layoff or something. You wouldn't know that things are a total mess right now because the stock market's doing great today. I just checked, the Dow's up at time of recording this video about 350 points. Nasdaq's up, S&P is up. Cryptocurrencies are back up. Gold is up. The 10-year bond yield is down. Why? Because these numbers are so bad and the job market and the employment picture in this country is so bleak right now that the odds of a rate cut at the Fed's December 9th and 10th meeting are back up to 90%. Okay, so the Fed's going to cut another quarter point at least. And so that is a good news sign, thumbs up sign for the markets, for assets like gold, silver, cryptocurrencies. Okay, so, but it's sad for the bottom, let's say 99% that aren't enjoying the run-up in these assets, especially if they are one of the jobs that were cut or one of those ones sitting on the sideline looking for work, including a story I'm going to share with you that I saw also a release today about the recent graduates, okay, those with college degrees. So the story, before I jump in, from CNBC today about the November private payrolls, as I always humbly ask, if you're not subscribed to the channel, please subscribe so we can keep growing on this community. I do appreciate all of you being here. So the U.S. labor market slowdown intensified, it says, in November as private companies cut 32,000 workers, with small businesses hit the hardest, according to the ADP report today. With worries intensifying over the domestic jobs picture, ADP indicated the issues were worse than anticipated. The payrolls decline marked a sharp step down from October, which saw an upwardly revised gain of 47,000 positions and was well below, listen to this, the Dow Jones consensus estimate from economists for an increase of 40,000. So for November, the economists, the experts, were predicting the consensus, right? The average was they were looking for a 40,000 job increase. Instead, they got a 32,000 job decrease. So that's a 72,000 number or job number swing, okay, in the wrong direction. Okay, but it almost missed by a margin of 100%. Larger businesses entailing companies with 50 or more employees, it says, actually reported a net gain of 90,000 workers. However, establishments with fewer than 50 workers saw a decline of 120,000, including a drop of 74,000 among firms with 20 to 49 employees. Total loss was the biggest drop since March 2023. So you had 90,000 gained in 50 or more employee companies, but you had 120 lost with companies with fewer than 50 workers, okay, and 74 among firms, 74,000 lost among firms with 20 to 49. That's how you get the loss, the delta loss of 32,000. Education and health services led gainers with 33,000 hires, while leisure and hospitality added 13,000. But a broad-based decline across industries drove the total lower. Broad-based decline, when you see that, that's a bad signal, okay? The biggest loss came in professional and business services, which saw a decline of 26,000. Other shuttered jobs included information services, minus 20,000. Manufacturing lost 18,000. That's a bad sign. And financial activities and construction, both of which saw losses of 9,000. The rate of pay also slowed. Okay, so we put further bad news on top of bad news. The rate of pay also slowed, with workers staying in their jobs, seeing a 4.4% year-over-year increase, down 0.1 percentage point from October. So the rate of pay is declining, and these people are not even being able to hold on to their jobs. Hiring has been choppy of late as employers weather cautious consumers and an uncertain macroeconomic environment, according to ADP's chief economist. And by the way, I saw something that the administration, one of the people in the administration is saying that the job numbers are really bad because of the shutdown primarily, okay? So, but again, why would the government shut down? Just rhetorical question. Why would the government shut down, right? Affecting, let's say, government employees. Why would that affect these private payrolls numbers? It says, while November's slowdown was broad-based, it was led by a pullback among small businesses. The ADP reports the last jobs picture the Federal Reserve gets before it meets on December 9th. Probability the central bank will approve another quarter percentage point cut is now up at 90%. In recent weeks, the Fed has expressed a divergence of opinions. I'll bet that divergence, that they narrowed the gap pretty closely now on that divergence on the Fed side, given how bad this jobs picture is. The Bureau of Labor Statistics will release its take on the non-farm payrolls report on December 16th, okay? So that's going to be after the Fed meets and decides on its rate cuts. So the markets love this news, okay? Bad news is great news for the markets because it means more cheap money flowing in. Let me share just real quickly one last story I saw also today from the Zero Hedge entitled, 1 in 4 Americans has a degree, the future of white-collar jobs, right? Having a college degree, spending money, which now is excessive. The debt loads these students are coming out of school with is incredible. They can't pay it. They can't find work. But that used to be the ticket, right? The meal ticket, get a college degree or go on and get a graduate degree. If you take on some debt to do it, don't worry, you'll be ahead of the game. Things are changing. I'm going to share another, the afternoon video today is going to address that and some possible solutions. So with a changing economy, AI replacing many jobs and widespread unpreparedness for the job market, the time-honored tradition of tossing their caps in the air to celebrate earning their degrees and starting exciting new careers has turned into disappointment for many college graduates. Statistics released by the Department of Labor on November 20th show that 25% of the 7.6 million unemployed Americans in September held at least a bachelor's degree. At least, right? Some of them held, graduate degrees, MBAs, LLMs, JDs, maybe MDs. I don't know. With more than 1.9 million unemployed college graduates on the market, the September data show little or no change from that of August in major industries to which young degree holders typically gravitate. That's financial activities, professional and business services, wholesale and retail trade, the federal government, and transportation. Seasonally adjusted, overall unemployment rate was 4.4% in September, while the rate for degree holders rose to 2.8%. From 2.7% in August, well above the 2.3% recorded in September of 2024. So the rate for degree holders is going up. More of them are in school, more of them are coming out with degrees, with debt, but the unemployment picture is also getting worse. So it's like worst case scenario. Don't want to go too long on that today. It's unfortunate news. It is symptomatic. Is it AI? I mean, when you see losses in professional business services, that's what I do. That's, let's say lawyers, financial advisors, things of that nature. So that is not good news. And I just, when they miss the mark by that much, again, the unexpected, you have to really scratch your head and say, where is this heading? Where are we going? Leave your thoughts and comments. If you enjoy the content, leave me a like. If you're not subscribed, please subscribe, hit the bell notification. And with that being said, I appreciate you being here. I'll talk to all of you soon. Bye.